So I'm now hearing some analysts trying to argue that Bitcoin and the S&P 500 haven't been that dramatically correlated during the coronavirus liquidity crisis. For example, Van Eck's analysis found a higher correlation between Bitcoin and gold than they did between Bitcoin and the S&P 500. And I guess it comes down to how frequently you sample the data. In either case, I think it's a bit of a strange argument to make, as we already know that everything does become more correlated, and we should expect it to be more correlated during a deep crisis. And the correlations between all assets are much higher in this environment. And it's not so much that Bitcoin is correlated to stocks or gold, but all of these assets are impacted by the much larger exogenous event that is the economic shock from the coronavirus and the lack of liquidity in the markets in general. And if you look at the chart that Van Eck has provided, so here's the column that here's the case that they're making. If you look at the column here, it's the correlation coefficient is higher for gold than it is for the S&P 500. But again, it comes down to sampling. Van Eck samples this data daily. If you do hourly sampling, you get different correlation coefficients. But I think the larger observation to make here is that all the correlation coefficients across the board are much higher than they usually are. This whole column here for Bitcoin is usually around 0 for everything. And let's see. So here's another chart from Coinmetrics, and I think it's without a question that we are seeing much higher correlation than usual. And I don't think it makes sense to try to pretend that this isn't happening. And it of course it begs the broader question, which is whether is it truly over? Has the stock market really finished falling yet? And I think if what we're experiencing now is just a rebound, what is going to happen to Bitcoin if we start falling again? So I find this chart from Larry Cermak from The Block really useful. It's looking at how historic market collapses have played out. And looking at this chart, I remind myself that we were at valuations that lacked precedent in history, heading into an unemployment situation across the world that also lacked precedent in history. I mean, it is of course possible that we recover quicker than we think, or it's even possible that Bitcoin manages to decouple itself from the stock market. But I think we gotta at least entertain the idea that it doesn't happen, and that we do go into a deeper economic crisis, and that the correlation continues to drag Bitcoin with it. I mean, this could go on for quite a while. It's not necessarily over yet. But then again, there's at the same time as we might be heading into a recession, and we might be facing a very real scenario where most people are just holding on to their cash, not making any decisions, especially not making investments into volatile asset classes. There's this simultaneous, very bullish narrative that could have the ability to turn this whole situation around, which is, of course, that we are heading into the halvening. And whether or not you believe in the relevance of stock to flow or not, the market does believe in it, or at least the market does believe that the scarcity of Bitcoin creates an opportunity in times of also unprecedented fiat stimulus, or BRR, as we now call it. And I know that there appears to be some confusion here, as we, if we are actually heading into a recession, and if that actually happens, inflation drops during a recession, because what we have had up until now, which is a credit expansion, will instead turn into a credit contraction, and that effect that the credit is now being contracted is going to have a much larger effect on what the actual money supply is. So if you look at forecasts on the inflation rate, if you look at treasury bonds and you compare treasury bonds that are inflation protected and the ones that are just nominally traded, the inflation forecasts now are nearing 0%, and that's for 5 and 10 years ahead in time. And I don't think that that's necessarily going to change the outlook for Bitcoin, because it is, after all, the narratives that drive the market, and seeing very aggressive central banking actions is having a much stronger psychological impact on the market than what these rather unintuitive inflation forecasts do. And currently we're also seeing fund managers coming out with very bullish outlooks for Bitcoin. There seems to be some type of trend, at least from what I can tell, that people are reacting to reignite the demand for Bitcoin. So Airpol says that he's seeing this. Novogratz says that he's seeing this. Both Novogratz and Arthur Hayes are actually predicting that we retest Bitcoin all-time highs at the end of the year. And to be honest, it doesn't sound that absurd to me at all. All I'm saying is that we have these two forces coming against each other, and it's very difficult to tell which effect is going to strong arm the other. And I think it very much depends on what happens in the market in general. Is the S&P 500 and a continued market decline and the general subdued appetite for risk on assets going to drag us down? Or will this be the moment where Bitcoin shines? I think that's the question that everyone should be asking themselves. And it also seems like it's a very fickle thing. It could be one way or the other. So I've been trying to look at the data to see if there's anything indicative of Bitcoin actually attracting new capital. And I figured looking at exchange volumes is really the wrong angle here because, of course, exchange volumes are going to be a lot higher than usual when the volatility is a lot higher. So I'm trying to gauge an uptick in demand by looking at the web traffic. And this is, again, a chart from Larry. I don't think that we're seeing anything at this moment that supports the idea that we're seeing substantially more demand right now. One thing that I've been trying to assess is whether we've seen any shift in where the volumes are coming from. If we're seeing a trend towards more institutional players coming in to dominate the market. But I haven't seen any significant change in the relative volumes to support that at the moment. But I'd be very interested to hear if there's anyone that has some analysis that suggests that or can detract from that. The last thing that I'd like to bring up is looking at the wider cryptocurrency market. All correlations seem to have gone up considerably, with pretty even relative price swings as well. So this is why I'm personally not finding, I'm finding it much more relevant to just focus on the macro picture and decide for myself, do I want to be in the cryptocurrency market or do I want to be outside the cryptocurrency market? Because altcoin bets are just going to be dominated by that macro outcome regardless. So it doesn't make much sense to pay a lot of attention to the difference between their moves at the moment.